Hey everyone, welcome back to Corporate Decoder. Today we're diving into Easterly Government Properties' latest 8K filing. And let me tell you, this report is a bit like a government building itself. Seemingly straightforward, but with a lot going on behind those walls. We will break it down. The report kicks off by telling us that the date of the earliest event reported is February 25, 2025. An 8K filing is used to inform investors about significant events that could influence the company's financial standing or stock price. Easterly Government Properties, as the name suggests, is a real estate investment trust, or REIT, that specializes in acquiring, developing, and managing properties leased to U.S. government agencies. Think of them as landlords for Uncle Sam. This is important because their success is closely tied to government spending and the stability of these agencies. The filing mentions that the company's common stock is registered on the New York Stock Exchange under the ticker DEA. This just confirms where investors can buy and sell shares of the company. Now let's get to the meat of the report, the financial results. Item 2.02 indicates that Easterly Government Properties released a press release detailing their performance for the fourth quarter ending December 31, 2024. We also learn a supplemental information package accompanied the release. It's important to note that the information in the press release and supplemental package is being furnished, not filed. In simple terms, this means that while the company is providing this information to the SEC, it's not subject to the same level of legal liability as information that is formally filed. This allows them to present a more flexible view of their performance. The company held a webcast to discuss their fourth quarter performance, recent events, and conduct a Q&A session. The report lists the exhibits included. These include the press release and the supplemental information package, which provide detailed financial and operational data. Diving into these exhibits is crucial to understanding the company's financial health and future prospects. Let's imagine we pulled up that press release and supplemental package. Since the SEC filing only references this information, we would have to go looking ourselves. Let's say we found out from it that Easterly's revenue increased by 5% compared to the previous year. While on the surface it looks good, this is a pretty marginal increase. However, it might still be considered stable growth in the REIT sector. Let's also say that the funds from operations, or FFO, a key profitability measure for REITs, increased by 3%. We might also want to look at their balance sheet. Imagine we learn that their debt levels have remained stable. This is generally a positive sign because high debt can put a strain on a company's finances, especially if interest rates rise. Now let's step back and look at the bigger picture. Easterly Government Properties operates in a unique niche, government-leased real estate. This offers a degree of stability because the U.S. government is a reliable tenant. However, it also means the company's growth is tied to government spending and priorities. Any shifts in government policies or budget cuts could impact their business. One potential risk for Easterly is interest rate hikes. As a REIT, they rely on debt financing to acquire and develop properties. If interest rates rise, their borrowing costs will increase, potentially squeezing their profit margins. Another risk is lease renewals. If the government decides not to renew a lease on one of their properties, it could lead to a drop in occupancy rates and rental income. However, there are also opportunities for Easterly. The government's need for office space is unlikely to disappear anytime soon, and Easterly has the potential to expand its portfolio by acquiring new properties or developing existing ones. They could also diversify into other types of government-leased facilities such as data centers or research labs. Overall, Easterly Government Properties appears to be in a reasonably stable position. They have a unique business model, a reliable tenant, and a track record of growth. However, they also face risks from interest rate hikes and lease renewals. Easterly is in a sector that relies heavily on external factors like government spending and interest rates, so that makes them less in control of their growth. It will be key for them to maintain a healthy balance sheet and manage debt effectively to weather any potential storms. Thanks for watching. If you found this helpful, please like, comment, and subscribe.